Hello, this is Ahura, and I'm with you with another daily outlook video or daily briefing, whatever we call it, for day trips especially. But the information that I'm giving you about especially fundamental data and information, it will help you to have better decision for your short and long term tradings. Let's see what happened yesterday. Yesterday from China, we had new loans number and trade balance. But while the Chinese trade balance, thanks to the much better than expected exports, was increasing almost twice than more than expectation, 70% more than expectation. At the same time, new loans numbers decreased. It was less than expectation and telling us that we shouldn't be that much happy also with the export numbers. You know what means loans, new loans? When the businesses are happy, when they have hope, when people are thinking that they're feeling it, that they're going to have a better businesses, they have a better sell and stuff like that. So they are trying to increase their business. So they are trying to make something new, create some new products, or add some new services which they need the money for that, and they're taking in new loans. So when we have a new loans, it means that new loans increasing. It means that the businesses are happy. And or they have a better hope for the better future. They have a hope for better future. But when and vice versa, when we have less demand for the loans, for the new loans. After that, after China's and let's see, go to the European industrial production in August, it was falling a little bit less than expectation. It's like at least it was falling 1.2%, but in line with expectations. But in a yearly base, it was increasing 5.4%, 5.1%, and it was fine. In a UK, GDP numbers in August was falling mostly, August and September, mostly because of the shortage in energy and a labor market. However, industrial and manufacturing production still was doing much better than expected and increasing. But however, put all this data aside, yesterday mostly the market focus was on US CPI and FOMC meeting minutes. The CPI numbers telling us that the inflation numbers increasing, and when you see that rates increasing, rent raise, the rent prices increased. When you see the prices increasing in a raw material, energy, housing numbers is increasing, like rents or the house prices, it means that the inflation is going to stay a little bit longer, because these are the core data. These are the main important data that they can keep the rates a little bit, keep the inflation higher always. So yesterday, based on according to yesterday published data, the rate of the rent rate is also increasing, which means that the inflation increasing, and it's going to stay a little bit longer. It counts, as you see it after data. You see here after data, as you can see in the chart, the US dollar raise, the US dollar increase. But however, later when we had FOMC meeting minutes, actually the FOMC member, they changed the game, and it caused all the way, you can see here, it all the way down the US dollar index to the down to fall here. One of the main reasons was that when I'm telling you that the FOMC changed the game, what does it mean? It means that always we always used priced in market, always priced on tapering. So the tapering was not something new, because we are talking always about that like months and months. So that's why the market is not paying attention that much to the tapering, since already everyone is waiting for the start of tapering in somewhere before new end of this year. But the main question right now is when to end it and when to start the rate hikes. Market was, according to the data, market was waiting for the rate hikes since like in the 2022. Even in so many like me, we were waiting. I am waiting for the rate hikes for the first half of the next year. But the thing is that in yesterday in FOMC meeting minutes, we saw that there is too many differences between the ideas, and we cannot see that much agreements on a rate hike in 2022. Even if it happens, it's gonna happen 2000 end of the year. So that was that brought the hope to the market and changed the game and make the like it kind of like right now it kind of means like the kind of we were talking about the dovish and the hawkish policies. So this FOMC meeting minutes right now is going to like it means that we are in right now in a still in a dovish because according to the situation holding the rates by like a little bit longer time is a dovish policy. In last days we had I don't remember exactly which one of the FOMC members, but they told that we don't want to make a mistake. We don't want to repeat the same mistake as we did after 2008 and 9 crisis and increase the rates so fast before everything is in its place. So that's why probably we will see the rates. But this is what I'm talking according to yesterday's meeting minutes. I'm not talking about my idea. This yesterday meeting minutes telling us this. But however, I still thinking that with the ongoing product, with ongoing problems in the next meetings, things will change. But still, the market right now, what got from the yesterday meeting, it was this, and probably we will see. This means that probably that we will see the rate hikes just end of the 2022 and maybe 2023, as many of members just talked about that. However, we have other members also they are supporting the rate hikes a little bit earlier. And then later in the energy market, I have to mention that yesterday we had API data. API data this week, API and EA data because of the Monday, some parts of the some holidays we had, so some parts of the businesses economy we had holiday on Monday. API data and UAA data, which is supposed to come on Tuesday and Wednesday. This week we will have them on Wednesday and Thursday. So API numbers yesterday showed that 5.2 billion, 5.2 million barrels increase for the last weeks in U.S. crude oil inventories, and today we're going to have the official numbers for EIA, Energy Information Administrations, that we see that what they say, what's going on in official numbers. Probably official numbers also should show us the little bit more increase in crude oil numbers. What market waits for? Market waits for something like 2 million barrels increase. So let's see what's going to happen here. I don't know exactly. I don't remember the number. How so? Today, what we're gonna have, what we have to focus on today's number. Let me tell you something. That today's till now, we had employment change in employment numbers in Australia and inflation numbers, producer inflation numbers, and consumer inflation numbers in China. Consumer inflation numbers and producer inflation numbers decreased, fell. But producer inflation numbers in China raised to 10.7%. It's almost the highest level since, I don't know, it's like a long time. It's an amazing number. This is telling us that the inflation in China also should be taken seriously as the PPI increasing. And this was a little bit so with all these numbers, what we can say that since the inflation varies right now, it's not just in the US, it's all over the world. So it means that we are in equal position right now. So this is a little bit of that, and it caused what? It caused the US 10 years bond yields, totally not just 10 years. It caused the falling in a bond yields. And yesterday and last night we could see the rates, bond rates fell. Let me see the numbers. Let me tell you the exact numbers currently. US 10 years bond fell to 1.55, and Germans fell to 0.122, minus 0.122%. These numbers telling us that currently, as the inflation numbers, inflation concerns is like it's an international concern, so we're gonna have this rates a little bit lower. These lower rates cause the cause the Nasdaq to increase a little bit earlier than other indices in the U.S. market. Today, besides after that, we're gonna have as always, as all Thursday, initial jobless numbers. The initial jobless numbers still important, but not like before, because already we know that's like overall market labor market situation. So mostly today we're gonna have this reaction to the like a little bit more reaction to the published numbers according. So that's the reason, you can see the data. Look, let's go here. As you see, the US dollar fell after this data, but still the thing that if you look at the higher so the bigger time frames, we can see that the US we can see USD index is still in an uptrend, especially as long as it's trading above 94, and especially it's trading above 93. So US numbers probably we can see again. We don't have enough evidence to see that the US dollar index to go back to the downtrend. Still, we are in an uptrend, and we do not have enough reason to say it's going to be fall more. In the market also, in the gold market, after falling US dollar, gold increased. However, at the same time, we have stock markets also increasing. So it means that the gold bulls will be limited, especially if we can see another recovery in US dollar, which is so likely. So gold cannot go further, and we can see the gold to fall a little bit more as the US stocks market is increasing. About the US markets increasing, also, let me tell you something. Let's go to the 4 hours chart. The 4 hours chart telling us that if we want to see more raise from here, let's go in the daily chart. Look, here is 4,430. Let's call it 4,430. This is the K level right now for here at it's like as a K resistance. If we want to trade in an uptrend, if we want to go to the uptrend, we have to we have to increase we have to pass this number. Right now we are in a 20 daily moving average, which is the middle line of the Bollinger Bands for SP 500, but 4,380. Above this number, trading above this level can start signaling the uptrend, but it doesn't mean the uptrend is confirmed. And uptrend is still RSI is still slightly 47 in daily chart. In the 4 hours chart, RSI is 55. So it means that if you want to see uptrend, RSI should be about 60 and more. In 1 hour chart, yeah, RSI is at 64. As I told, in the short term, we can see this like for a few hours, we can see this uptrend a little bit higher numbers around this. But moving to just changing the trend to the uptrend is still far to talk about. So overall market condition still is a downtrend. So going to the uptrend is a little bit soon to talk about that. About the currency, about the cryptocurrency market. Bitcoin again raised yesterday after we had news that we're going to have the ETFs in some ETF, more ETF for the bitcoins. So it's a little bit helped like to the market, help the market's condition and the market expectations to increase the Bitcoin a little bit more. At the same time, falling US dollar also helped, because as we are trading the Bitcoin against US dollar, BTC USD, the falling US dollar also increased the Bitcoin bulls, while this return in the US dollar can put the Bitcoin again under pressure to see it's in lower numbers. Euro increased against US dollar after weakness in USD, but still in a general trend is still downtrend, and we cannot see enough evidence to change the trend. US dollar is trying to increase as long as it's not as not as it's not past the 1.17, like somewhere here, we cannot confirm the uptrend. So this is the overall market situation and overall market condition. So today mostly we have to follow what we have to I forget to say about the earnings. Yesterday we had a Delta Airlines, and we had Delta Airlines and JP Morgan's. JP Morgan's and Delta Airlines both, they were better than expectations. But there is just about the Delta Airlines and both. Let's see that one by one. Delta Airlines, while it was much better than expectations, still they had some problems in their comments. The main problem in the comments was that they were concerned. Their main concern is in the next quarter, as the energy price is increasing, as the oil price increasing sharply. So it means that ticket prices should be raised, and it will put their income at the risk. So it caused a little bit downtrend in the the stock's price after even better than expected numbers. For the JP Morgan, while the asset management brought them a little bit better than expected incomes, however, they were not good in the new loans numbers, and the people, they were not that much interested in the new loans, at least for the JP Morgan's new loans. So it's the balance this came from here, and also they used $2 billion from their reserve to pay their EPS, their late their delayed EPS. So it's also, the market was not that much good on this report about this using from the reserves to pay the EPS debts that they had from before. So this caused all the together caused both of them to fall after even the better than expected reports. Today we're gonna have the Bank of America, we're gonna have the Wells Fargo, Morgan Stanley, Citigroup, also all the main banks in the US. They're gonna have the reports today, and we have to follow them. But we have other, besides that we have other companies as well. But the main focus will be on Bank of America, Wells Fargo, United Health Group. Oh, don't forget about the United Health Group, and Taiwan Semiconductor also, TSM ticker, will be very important, because right now the semiconductors are very very important in the market for the productions. So this is what's going to happen today in the market, and what you have to take care about, and what happened in yesterday market. Hope it was useful for you, and see you guys tomorrow.